good news for the crypto market today. New US inflation figures have just been released and they are helping push cryptocurrencies higher. We're going to talk about that along with several other major stories. We'll discuss Ripple, Visa, and Mastercard backing a new payment protocol. We'll also talk about USDC, decentralized finance, institutional adoption, and PayPal, which could potentially be acquired following a takeover offer from a major payment company. There's a lot to cover today. Hello, everyone, and welcome to Crypto Red, the channel dedicated to cryptocurrency news. Let's talk about the inflation data. Some important news has just been released. So take a look at the latest US inflation figures. The Consumer Price Index, or CPI, has just been published, showing a 0.4% decline in June 2026. That is very good news. It has been quite some time since we last saw a monthly decline of this size, and the financial markets are reacting positively. Why are both the stock market and the crypto market responding so well? Well, because these figures reduce the pressure on the Federal Reserve to raise interest rates. We can also see the impacts on poly markets. Look at the current probability of the Federal Reserve raising interest rates in its meeting in 13 days. That probability is now almost zero. The market is currently pricing a 93% chance that interest rates will remain unchanged. That represents a significant change, and this inflation report has clearly had a major impact on expectations. Looking back at previous figures, expectations were very different. On July 14, the probability of rates remain unchanged was only around 64%. It has now jumped, like I said, to 93%. So this news had a major impact on this. The Federal Reserve is now widely expected to leave interest rates unchanged with very little uncertainty remaining around the upcoming decision. We will then have to see what happened between now and September. For the moment, however, these figures are reassuring investors across the stock market. And this is generally excellent news, and it has only just been released, and the market is reacting positively. As you can see, the crypto prices are really strong today, a strong day for cryptocurrencies. Now let's talk about Ripple, Visa, and Mastercard. They're all backing the X402 payment protocol. You are probably familiar with the 404 error code that appears when you visit a web page that does not exist. These HTTP codes have existed since the early days of internet, and another code, 402, was originally reserved for payment required, although it was never widely used. And Coinbase later created the X402 protocol around this concept. Coinbase has since transferred the project to the Linux Foundation, meaning the protocol is no longer controlled exclusively by Coinbase. It is now supported by a wide range of major companies and organizations. Take a look at some of the names involved here. We have Ripple, Visa, Mastercard, American Express, Stripe, Shopify, Google, AWS, Cloudflare, Circle, and many others. This means the protocol now has the backing of a very diverse group of major players from the payment, technology, cloud computing, e-commerce, and cryptocurrencies industries. According to the project's website, the protocol processed 75 million transactions over the past 30 days, representing approximately $24 million in total volume. When we do a quick calculation, that comes to an average payment of $0.32 or 32 cents. That tells us something very important, that these are mainly micropayments, which is exactly what the X402 protocol was designed for. It can be used to purchase access to small articles or pay for an API each time it is called. These are extremely small payments that are difficult to process efficiently using traditional credit cards. Credit cards, you have some fees, you have some fixed fees, which can be significant compared with the value of the payment itself. And so, a traditional payment system, therefore, does not work very well for this kind of microtransactions. The X402 protocol is designed to address that problem. Payments are mainly made using stablecoins on blockchain networks where transaction fees are very low. It is completely network agnostic. It can work on Base, but it can also work across different blockchains. When you look at the range of companies supporting the project, you can clearly see that the ambition is to build a payment system that works across the entire blockchain ecosystem. You can even see that Monad is involved in the project on another blockchain. So overall, I think it is a very positive development, and I'm glad to see this protocol gaining momentum. Of course, the next thing that comes to mind is AI agents. Those agents will be able to make requests, execute payments, call different APIs, and perform actions on your behalf. You can imagine an agent working for you, searching for information, interacting with different services, and completing tasks automatically. And there are many possible applications of this protocol because payment is a core thing on the internet. So yeah, there are things that were simply not possible before, and for me, this is an excellent real-world use case for cryptocurrencies. Hopefully, this thing will develop next in the future. Now, still on the subject of stablecoins, USDC has recently been facing some uncertainty because of the launch of OpenUSD, of the announcement of OpenUSD, which I mentioned, I guess, previously. A large number of companies are supporting OpenUSD, and Wall Street analysts are now asking whether USDC will be able to maintain its position. Opinions are divided. Some analysts believe that the launch of OpenUSD will make things much more difficult for Circle because it could increase the pressure on the company to share a larger portion of the yield generated by its reserves. At the moment, Circle keeps around 38% of the revenue generated from the reserves, while with OpenUSD, more than 90% of that revenue is reportedly redistributed to the companies and platforms distributing the stablecoin. Now imagine Coinbase deciding to move from USDC to OpenUSD. That could create a serious problem for Circle because Coinbase is one of the largest distributors of USDC. Of course, making that change would probably not be in Coinbase's interests because Coinbase also owns a significant stake in Circle, the company behind USDC. Still, this illustrates the competitive pressure that could develop between these stablecoins. Other analysts have very different opinions. They argue that Circle already has a strong market position and that users and platforms will not necessarily migrate to another stablecoin. And when you look at USDT, that argument makes sense. USDT is the number one stablecoin, and Tether does not redistribute any of the yield generated by its reserves. It keeps that revenue for itself. Despite having a market cap of around $184 billion, USDT has not been seriously disrupted by Circle, and OpenUSD may also struggle to challenge it. For me, one of the main reasons is USDT distribution. USDT is already held by millions of users across a huge number of wallets, exchanges, and applications. The cost and complexity of migrating all of those users to another stablecoin will be extremely high. To replace USDT, millions of users would need to decide to sell their USDT and move into USDC or OpenUSD. Many users do not necessarily care whether they are holding USDT or USDC. They simply want a stablecoin that they recognize, that is widely accepted, and that they consider secure. They are looking for somewhere to hold stable value without having to think too much about it. And that creates an extremely powerful network effect and makes migration very difficult. The situation may be slightly different for USDC because a significant portion of its supply is concentrated on a small number of large platforms, including Coinbase or Hyperliquid. A major platform could theoretically announce to its users that within 1 month, all USDC balances would automatically be converted into OpenUSD. That type of migration is technically possible and could happen relatively quickly. USDT, however, is deeply integrated into decentralized finance and into a large number of protocols. Migrating all of those integrations would be far more complicated. Overall, I still think migration would be difficult, like I said, for both USDT and also for USDC. And in my opinion, the products facing the greater risk are probably not the major payment stablecoin themselves. The most exposed products may be tokenized back office instruments such as Beetle, BlackRock's tokenized money market fund, which distributes part of the yield generated by its underlying assets. A migration away from that type of product would be much easier because a relatively small number of protocols and institutional platforms hold Beetle tokens. Those platforms could move their liquidity relatively quickly. They would have a strong incentive to migrate toward a stablecoin or tokenized fund that redistributes a larger share of the yield. That is where I think the competitive pressure could be much stronger. So the situation is complex. I do not think OpenUSD is going to arrive and completely destroy USDC. USDC already has a major presence across exchanges, wallet payment services, and decentralized finance. However, OpenUSD could become a serious competitor. It could potentially reach a market cap, I don't know, $10 billion, $20 billion, $30 billion. I think it is entirely possible. One concern I have about OpenUSD is that it appears to be built by a consortium of many different companies, and there does not seem to be one clear leader driving the project. And personally, I sometimes struggle with that type of structure because decision-making can become complicated when too many companies are involved and no single organization has clear control. Still, greater competition in the stablecoin market is a positive development. We need more competition, and ultimately, that should benefit users. Let's move on to decentralized finance and Galaxy Digital. Galaxy is preparing a new lending protocol aimed at new lending product, in fact, aimed at institutions and borrowers looking to borrow at least $1 million. This is clearly not designed for the general public. The objective is to offer a very simple lending experience by aggregating liquidity from Aave, Morpho, and other DeFi protocols, including Spark, Camino, and potentially additional platforms, instead of requiring institutional clients to interact separately with several DeFi applications. Galaxy wants to provide a more accessible and unified interface that could make decentralized lending easier to use for these large investors and institutions that want exposure to DeFi yield without having to manage every protocol individually. They are going to offer institutions a very simple way to deposit collateral and borrow funds, and behind the scene, Galaxy will use various DeFi protocols to manage everything. I think this is positive development because institutions do not necessarily want to deal directly with DeFi protocols. They want a simple product, like I said. Galaxy will also introduce kind of an index rate that aggregates the different lending rates available across these protocols. The idea is interesting, but in my opinion, it is extremely difficult to abstract away the decentralized finance layer when it comes to lending markets. You are not taking the same level of risk when depositing money into Aave, Morpho, Spark, or Camino, or another protocol. The risk structure is completely different from one platform to another. On Aave, for example, collateral is generally managed within a large shared liquidity pool. On Morpho, collateral and liquidity are separated into individual markets. These systems do not work in the same way and they do not expose users to the same risks. That is why I personally would not have built a similar product. I would not feel comfortable depositing money without knowing exactly where it was being allocated. I would want to know whether my funds were deposited on Aave or Morpho or in other DeFi app. But still, institutions want a simple solution, and Galaxy is going to try to meet that demand. Morpho is already used by Coinbase, for example, as a back office tool. Coinbase user deposit CBBTC and borrow USDC directly to the platform. So yeah, it's an interesting example of how DeFi can be used as a financial infrastructure. The end user may never interact directly with the DeFi protocol or even realize that DeFi is being used behind the product. The protocols operate in the background and as a lower infrastructure layer, while a simpler financial apps are built on top of them. It is similar to the way AWS provide infrastructure for website and application. Most users never interact directly with AWS, but a huge number of services rely on it behind the scenes. People who are familiar with network architecture can also think of it as a layered model. The DeFi protocols form one of the lower layers, while consumer and institutional products are built on top. Now let's move on to another major story involving Stripe and PayPal. Stripe has partnered with Advent, a private equity firm, and they have reportedly submitted an offer to acquire PayPal for nearly $53 billion. The offer represents a premium of around 28% compared with PayPal's market cap before the news emerged. PayPal shares reacted immediately. The stock was up around 16% in pre-market. So I'm moving closer to the proposed acquisition price. Of course, there is no guarantee that the offer will be accepted. Still, this is a remarkable situation. PayPal is one of the most established payment companies in the world that has been operating for decades. Stripe, meanwhile, originally started as a smaller technology company trying to compete with PayPal by offering a simpler way for business to accept online card payments. And Stripe built payment tools that were extremely easy for developers to integrate. Developers adapted the platform very quickly, and Stripe grew into one of the largest private financial technology company in the world. Now, the company that once entered the market as a smaller PayPal competitor could potentially acquire PayPal itself. And both companies also have crypto-related products, which make the story particularly relevant to the crypto industry. Stripe and PayPal both allow users or businesses to buy, sell, or accept cryptocurrencies in different ways. Stripe is more focused on stablecoins, but they also have a fiat on-ramp and off-ramp for crypto. So yeah, I expect those activities to continue regardless of what happens with the acquisition. An acquisition of this size remains unusual, especially in the payment industry where both companies are already worth tens of billions of dollars and even more than $100 billion for Stripe. That is everything I wanted to cover today regarding the latest crypto news. Thank you for watching Crypto Red. Have a great day and I'll see you tomorrow. Bye-bye.